Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 18th of October. All right, now let's just have a look where that North American session finished. You can see the dollar index here just sort of trading sideways, right? We sort of got into an area here where there was so much hype around the Fed announcing the tapering plans, US CPI numbers, retail sales, etc., all sort of built up. It's almost like there was so much positive build-up in the US dollar. The whole market got itself long dollars, and we've seen a bit of a squeeze out the back door, right? And if I show you the majors here, you'll see this happens quite regularly when a move or a particular currency gets so polarized in the sense that everyone knows exactly where it's going. You can often get a turnaround, and you know what? If everyone's long dollars, the only move is back the other way, and that's, to me, is what's happened. Now, we did see, to support this, a drop in the US treasuries. Like the dollar has just been sort of banged away there, but sorry, just coming back to what I was about to say. Now, the US treasuries, they are coming back, right? We've seen the pullback. I think they're up, the 30-year was up around 216. It's been back down to like 201. It's now 205. They're just starting to edge back. Equities are starting to drift lower. Or US equity futures at the start of the Asian day. Now that should produce a bit of a risk-off day, and that's what we're seeing. Now, the Kiwi, the odd one out, if you have a look at the CPI numbers over here, Kiwi CPI numbers came out like massively bigger than expected. If you thought that was an easy trade, don't beat yourself up, because it is a bloodbath, right? So when you are looking at the Kiwi, look at the price action here. I mean, it sort of jumps up. Well, it's 50, 60 points. The spreads are wide. There's no liquidity. It's a Monday. So coming back to that, there's no chance of really getting into the Kiwi and getting out without getting burnt on the spreads and the volatility. Right. So what we've got is a bit of a risk-off day. As I said, the Kiwi will eventually join up and start going down. But you know what? Immediately, the market will be factoring in potentially further rate hikes by the RBNZ. That's probably going to hold the Kiwi up for the short term, right? If anything, obviously Kiwi, buying Kiwi against the Euro, Sterling, Aussie, probably a pretty good idea. But that's, you got to plan that before the actual event. All right, so let's just get back on track here. So what have we got? We've got a situation where I think it's, once again, we're at the crossroads, right? Dollar index, does it go up or down from here? Well, I think it goes back up, and that's going to be really dependent on the US treasuries. Now, don't forget, we are coming into week 3 of the month, right? There's all the big data's on the table. This is sometimes where, when there's no sort of hype around CPI or non-farm payrolls or retail sales or the Fed, once all that's out on the table, then we can start to see the normal move occur, right? It happens quite a lot. So this could be the week where the dollar, was a big clean out of long dollar positions over the last few days. Maybe they start to come back. So you want to keep a very close eye on the market and see how it sort of plays out. Equity markets may be a bit of a key, or the treasuries, right? And then when you are looking at that, it's obviously a good idea to start looking at the calendar and start piecing together where could that US dollar momentum come from? Or is another currency going to be in play, right? So that's what we're looking at here. Here's the UK, I was going to say, NZ CPI number plus 2.2. I mean, the forecast was for plus 1.5. You can see why it's sort of exploded to the top side and why it's holding on to those gains as opposed to Euro, Sterling, and Aussie, which are just drifting just a little bit lower. Now, it's been a long time since the Chinese data's come into play, but I mean, it's always worth having a look and seeing if it does. I mean, not probably actively looking for an opportunity, but just keeping a close eye on that. Now, I'm always looking for, sort of second tier US numbers that can give the dollar a little bit of a momentum kick. And it's not aggressive and violent like the non-farms or CPI. So keep an eye on those industrial production numbers. And then as I scroll down through the week, trying to pinpoint key events, the RBA monetary policy meeting minutes, there's occasionally, once every 6 months, there's a bit of a diamond in the rough of that data. So maybe have a look at that, or just factor it in that it's coming out. Once we get into like Wednesday, you've got UK CPI, right? Key event for sterling. Obviously important for what the Bank of England may be doing. I think more importantly, the Canadian CPI numbers. The Bank of Canada is very actively managing the forward guidance of the Canadian economy. So that's going to be a key release for this week. So obviously CAD crosses at that point coming into play. I definitely keep an eye on the crude oil inventories out of the US, right? Oil is up at $83. So any sort of signs of a lack of supply there or lack of inventories may push that crude price even higher. We've got some US numbers coming out, the weekly unemployment claims, Philly Fed manufacturing index. So Wednesday, Thursday, a bit of a key sort of start to, or key showpiece for the dollar. The RBA governor on Friday coming out with a bit of a chin wag. And then you come down to Friday's trading, and it's pretty much all about sterling and euro, right? So it's pretty even one. You got sort of Canadian retail sales down the bottom, but what we will see is for the European traders out there, sterling kicking into place. I'm more excited about the bunch of European German data, right? Euro, it doesn't look like it's, to me, it sort of feels very strange coming back to the charts. Feels very strange seeing euro sitting around 115, 116, right? You can actually sort of see, actually, let me just delete that. You can see this current move here, just sliding back as those US treasuries sort of like the yields spike a little bit higher. But as I said, like these currencies, right, they're above, short-term or recent resistance levels. Euro, sterling, Aussie, and Kiwi. Now, as I said, they are at this. I think they're at, once again at the crossroads. Are we going to see dollar strength or strength in the euro, sterling, Aussie, Kiwi, or CAD for that matter? So that's the big question. I'd like to see a bit more data. I'd like to hear more from the central banks. But outside of that, right, I'm still thinking about the US dollar and what it's got going for it. And it's got everything, okay? The central bank is active. They've got an economy that's boiling over. We've had a nice move higher in the treasury yields and a nice clean out back to the downside. Now they're starting to come back. I think this could be the slow burner. You just want to keep an eye on these US bonds. They keep edging up. You've got to expect equities to start to drift lower. And that should be a sign for the dollar to start rallying again and the dollar block to fall, right? As I said, we are at the crossroads. If we don't get any sort of movement in the treasuries this week, well, it could be sideways with a little bit more of a touch of an upward move in the dollar block, and the dollar may just slowly drift lower until we get the fresh round of data, right? We've got a 2-week window here where most of the big US numbers are out on the table, right? We know this is what I think. So we've seen the move up in the dollar. Yep, we've seen all the numbers. Every bit of positive news has been baked in. The market's got extremely long dollars. Now they've been cleaned out. We're trading sideways. Looks like it's forming a bit of a base for a move to the top side, but it needs some encouragement, right? That's why I'm looking at those industrial production numbers, or even weakness in, say, Euro, UK, Aussie data, right? That's where the answers may lie. So I think this is it's an easier week in the sense that we don't have these massive, big numbers that are going to knock us out with volatility and things like that. We should see less volatility and more directional moves. So keep an eye on your charts, get up your levels, look for immediate direction, whether that comes from the economic data, equity markets, or even the US bond yields, right? And then keep an eye on the commodities, right? If you haven't been trading commodities, you've just been sticking to the currencies, check the commodities. They've had a hell of a run. And there's diamonds in that boat as well. So make sure you look at all instruments, not just Forex, commodities, check out the equity indices. There's plenty going on and plenty to trade for. All right, guys, have a good one. Cheerio.